Welcome, ladies and gentlemen, London Mines and Money, and it's my honor and pleasure now to do an interview with Rick Rule from Sprott. And I must not really introduce Rick, he's way too famous for that. And we want to talk about markets, about metals, what's hot in 2020, so it's going to be exciting. Rick, welcome.
Pleasure to be back with you, thank you.
Yeah, thanks for taking the time here in London. Let's start maybe first with Sprott, with your company itself. What do you see is going on in the markets? What is the behavior of investors these days?
Since talking here at Mines and Money last year, what we see is the beginning signs of a sea change. To begin with, we're seeing the best flow of high net worth retail new business in the United States that we've seen since 2001. In other words, 17 years since we've seen new account openings like we're seeing now. The second piece of positive news that we're seeing has been, at least with our lending funds, the return of generalist investors, in particularly allocators, the big pension, state-run pensions and endowments coming back into the market. We haven't seen that impact the length and breadth of the mining market, and I suspect that Sprott's experience may be unique, given that we continued to work and market through the 7-year bear market when many of our competitors went dormant. So my suspicion is that what we're seeing is ourselves as overnight successes after 7 years of hard work, but it's certainly nice to see that hard work pay off. And if we are seeing flows now, the rest of the industry will see flows in a couple of years, which will be good for everyone, I think.
Yeah, that's fantastic. Yeah, that sounds very healthy. When you say you see inflows, is this an investment, let's call it, in physical bullion? You already said the lending fund, that's one thing. But do you also see like direct investments into mining companies, mining stocks?
When you see high net worth retail wanting to participate with us in an equity sense, it isn't just that they're coming into the mining stocks, but if you come to Sprott, you generally come to Sprott for market caps below $1 billion. So you're seeing, at least in the United States market, a return of interest to the junior miners and the explorers, something that has been missing for the last 6 or 7 years.
Definitely, yeah. Yeah. Oh wow, that's the first thing I really hear, like from a large investor, and you are one of the largest, definitely in that sector, which is extremely positive for 2020. What is your take on, let's call it, the precious metals? I mean, gold had the breakout, to my understanding. Silver still looks disgusting, the chart. What's your take on that?
I feel great about the precious metals markets. They are rising the way that they're supposed to rise. They're grinding higher, they're backing and filling, they're climbing the classic wall of worry. The reason behind the rise is also fairly obvious. Quantitative easing. If you and I did quantitative easing, your government and my government would call it counterfeiting.
Yes.
And negative interest rates. I mean, think about this from the perspective of a European investor.
Yeah.
You, as a German, could lend money to Greece for 10 years at a negative yield. This is probably the first time that the Greek government has told investors the truth ever. If you give us money, we'll give you back less than you gave us.
What a great deal.
That's what gold is competing against. Jim Grant goes so far as to call sovereigns return-free risk. Gold will do well against that competition, I believe.
That is for sure, definitely. Let's step a bit aside of the precious metals. We were talking the last years a lot of times about uranium. And to me, it looks a little bit like that something is going on in that market here. And, you know, I like more to argue with facts, with data. And to me, the supply is shrinking, but demand is still growing. So I think I see this as a positive sign. And also, if I look at the markets, approximately 1 billion to 1.2 billion pounds are not contracted for the next 9 to 10 years. So what is your thought?
It's easy to make a bullish case, it's easy to make a bearish case. The most bullish case to me was the recent Cameco statement that their average selling price for uranium is going to be almost $47 a pound. The fact that you're able, if you're a reliable supplier, to contract at 45, 46, 47 in a $25 spot market says something about where the utilities think the price of uranium is going to be 2 years from now. I'm embarrassed to talk to you about uranium because I was so bullish on it last year, and I was, of course, early. Now, in fairness, I did say that in the near term, the pace of Japanese restarts would determine the direction of the markets. And the Japanese succeeded in restarting exactly 0 reactors in the last 12 months. What happens 18 to 24 months out is that new build reactors outside of Japan have us to the point now where worldwide we're using more uranium than we used pre-Fukushima. The Japanese inventories still hang over the market, and I think that's largely responsible for the weakness in the market.
Okay, wow. So, outlook for next year on uranium, what do you think?
In the uranium space, I have to be a little bit guarded, I'm afraid. The thing that I thought would be the catalyst was Japanese restarts, and in the next 12 months, I don't see a catalyst. If, as you pointed out, in the recontracting cycle, we are able to establish markedly higher contract prices than spot prices. The last time that happened was in 2001. And that, as you may recall, was extremely bullish. The other thing that I think needs to be pointed out in the uranium market is the new receptivity for uranium equities. Very recently, a new issue, uranium royalty, came out. If my memory serves me correctly, Amir Adnani and that team went out to raise $20 million. They stopped soft circling the book at $53 million and closed the book at 30. $10 million above what they went out for. So clearly, a credible spokesman with a good story can raise money for uranium. And this was largely an institutional raise. So it was very interesting. There is money around for uranium, clearly.
Fantastic. Let's come to the last topic. Electric mobility, I would call it. Yeah, everybody talks about it, of course. Yeah, and if I look at the market, lithium, horrible hit. Cobalt, nice correction, I would call it. Yeah, copper is something which might now settle, which is probably on the way back up. What's your take on those 3 metals for you?
Well, after 10 years of being a lithium bear, I'm a lithium bull. The fact that we've walked through all the hype around lithium, the fact that as you walk around Mines and Money, there are no booths with electric cars and pretty girls.
Yeah, that's right. No Teslas.
The lithium juniors are gone. The companies that produce lithium, the Albemarleys, the SQMs, have been busy adding productive capacity. And I think they're going to make a lot of money. It's important to note, as Robert Friedland pointed out today, that the lithium-ion battery is really a copper-cobalt battery. And I think that you led me with a very good question. I love the cobalt business, but to participate in cobalt, you have to participate in Congo and Russia, which scares many people. Both of those countries have done well for me taking risk, but it's a difficult material to speculate in. The copper business, if you look at 5 or 6 years, I think is a no-brainer. It isn't just electric vehicles, it's the urbanization of the world.
Infrastructure, the whole thing.
You'll recall when you and I met each other many, many, many years ago, the thing that really changed the resource business was the urbanization of China. And as other countries urbanize, not as dramatically, but as other countries urbanize, a car has what? An electric car has 150 kilograms of copper in it?
Oh, it's even more, actually.
Okay, but a house has 1,000 kilograms, or 1,500 houses. And in places like Malawi, they have to build 2 million houses. My difficulty with copper is in the short term. I'm no economist, as you know. But my concern is that our economic recovery worldwide, as anemic as it's been, is 9 years old. And my experience has been that a 9-year-old recovery is long of tooth. So I'm concerned about the market. I'm concerned about the copper market in the 12 to 18-month time frame. I'm embarrassingly bullish in the 5 or 6 year term.
Okay.
I've been told by people who know it better than I, listening into the BHP conference call, that the incentive price worldwide for copper is $3.50 US a pound.
Wow, for new mines.
Yeah. So in order to open a new mine, you got to get 350, but right now you're getting 270. That's pretty interesting arithmetic.
80 cents missing?
Yeah. That's approximately. And we're living as a society on mines that are very long of tooth. Escondida, Chuquicamata, Grasberg, hell, Bingham Canyon, my country's biggest mine, is 110 years old. It's older than you and I. I mean, it's a very old mine.
That would mean something. So what are your, let's say, top 2 or 3 metals for next year? What do you think has the most power?
My top metal next year is gold.
Gold.
Yeah. My
Love
experience has been, I don't know if this is true, but my experience has been gold moves first, and then silver moves later. Silver moves further than gold, and it might be 2021 before silver moves. But what we're trying to do right now at Sprott is position our clients in very, very high quality silver stocks. My experience has been, again, that silver is extremely rare. And when silver moves and the generalist money tries to crowd into silver stocks, the market caps aren't sufficient to hold the money.
That's right.
Now, I'm not saying that's going to happen in 2020. I don't think it will. But I'm a pathological cheapskate. So in order to participate in 2021, I have to own in 2019.
That's right, when you want to buy cheap also.
Yes, sir.
That's the point. Well, Rick, thank you very much. Always a big pleasure to talk to you. And I would say 2020 is again another interesting year in the commodities.
A pleasure. Thank you for giving me the opportunity to address the German audience.
Thank you very much.
Thank you.
Yeah, ladies and gentlemen, it was Rick Rule from Sprott. And you heard it. Gold is definitely his favorite metal, I would call it, for next year already. And silver should follow then soon. And also cobalt, lithium might be things for the next years and upcoming. And as he and I are uranium bulls, let's see what happens there. We are all waiting for the trigger point, so stay tuned. Thanks for watching us and bye-bye from London.